What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and go over some very important dates for the markets and Tesla as well, and talk about how they may affect the price action of Tesla and its future price forecast. I'm also going to break down some very important things about economics that are happening right now in our economy involving China and the USA that are very important for Tesla and the markets as well. Before I break any of this information down and kind of go over some very important details about Tesla's share price and its retracement zone, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is you can always sell these 12 free stocks for cash and use that cash to buy some Tesla shares for free. It's a limited time offer, so check it out before they run out in about 2 weeks. But that's out of the way. Let's get on with the video. So looking at Tesla, we're seeing some very interesting price action. I'm going to use TradingView for this part. And we could see Tesla was on this uptrend going into like many months ago. We did get a bit of a push up since that low, and if you draw out a Fibonacci retracement chart from there, we could see where some of the very important key zones are based off these retracement levels. So Tesla's on this downtrend. We can clearly see it, and what's essentially happening from this point is right here on September 21st, we have the FOMC meeting, which is when the Fed is going to announce their new rate hike. And it seems like the Fed is going to be more aggressive for it, which is why the market is trying to price this in. And they essentially have to do this to really bring down inflation and slow down demand. And the latest jobs reports just came out, and obviously we're seeing a lot of job growth for August as well in the USA. Not necessarily the best of signs. It incentivizes the Fed to be more hawkish because we have to slow down demand to really bring down inflation in the way we want to. Now, the other date I have really mapped out right here is between November 2nd and the 8th. That's when we have election week. It's going to be very important for the markets. And that's why I think that it's very hard to predict what the market will do after, in my opinion, because it depends on the election as well. Because believe it or not, politicians do play a bit of a role in the markets and policies, and big investors and business people, they really look at that as well. So for Tesla, what am I seeing right now? Well, there's a clear downtrend. We could clearly see this. The volume has been pretty stable, not so great overall, at least as of recent. And we're also starting to see it drop down at a faster rate than like during this zone right here. So with that said, what could end up happening is Tesla comes down to one of its key zones. That's around that 268 range. And it's going to try to test 264. So between 268 and 264. And that happens to be where we got a bounce off 266. Now, if we break below that, that's also dependent on SPY. The SPY right now, it looks pretty bearish in my opinion, more bearish than bullish. If the bears have the edge and we see a lot more put flow and they push it down very hard, the overall market may take a bit of a hit after the rally we previously saw. So with that being said, if the market takes a bit of a hit, it will most likely end up dragging Tesla down, but it really depends on a very key zone that I was mentioning in one of my previous videos. So looking at SPY, I'm going to be watching with very key and hawkish eyes would be the 390 zone. If SPY holds this, which it's still a possibility, Tesla won't drop as hard, right? But what seems more likely, I mean, if you just look at the daily charts, it seems more likely like it is going to break down. If you just look at the trend we're currently on, we could see the 380s come very soon, all right, on SPY. If that's the case, I could see Tesla coming all the way down to this zone right here around 259, which is where we happen to have that gap. So that's like around that 260, 259 range. And the next Fibonacci retracement, the 0.5 would be at 255. So I could see Tesla coming here if the market takes another hit. Now the question is, do we bounce off 255? And this is where things become serious. I believe we could actually bounce off here if we are very close to there near the FOMC meeting date. But if there's more room for us, if we break below 255, we're most likely going to fill the gap all the way down to two. That's like around 250, around like 250 flats, 249. And that's when I think we'll be ready to see a bit of a bounce temporarily, right? We could head towards 250 to 240, that zone right there. And that's actually very close to where the golden pocket happens to be. So the golden pocket is that key retracement zone between that 0.618 and 0.65. And that in turn is where Tesla could get that balance between 240 and 243 if we actually come that low. Now, please note that Fibonacci retracements are not 100% perfect, so I can't guarantee this is where Tesla will retrace to. But if that's the case, what I think could end up happening is something like this. This is just a hypothetical prediction. Please take this with a grain of salt, non financial advice. So, if Tesla is trading over the next few weeks, kind of like this, and it comes down, I'm going to be watching 264. It's probably going to break below that in my honest opinion because we already saw 266 and the SPY is more likely to come down for the later weeks. With that said, Tesla could retrace down, in my opinion, to about 255. Now you could see right here, right where I'm pointing at, I know it looks pretty funny, but right here where I'm pointing at, we bounced off 255, around 255, 256 at one point if you adjust the chart. So I want to see if this thing could bounce off 255 and hold that, if that will be the absolute bottom before we get a slight temporary relief bounce after FOMC, in my opinion. That could be it. Now, if that's not it, if we don't bounce off that, the 0.50% retracement, then we're going to most likely come down and fill this gap here around that 250, 249, 250. And I mean, in that case, we might not just bounce off that gap, but we'll probably come down to the golden pocket around 243 to the 240s. All right, so the 240 to 250 range, very key zone. That's where I'd be looking for the bounce if 255 doesn't hold. And it seems like that's very much in the realm of possibility from this point. Now, I would kind of anticipate this to happen very close to the FOMC meeting. So I want to see a bounce after that, after the market gets the certainty we are looking for, after the Fed announces the rate hikes. So maybe after the FOMC meeting, we might get some temporary relief going into that. So I believe the last week of September, maybe going into like October, we might see some kind of choppy price action during some time in it. But most of the time, we might start to kind of like respect an uptrend. And we might see Tesla slowly rally all the way back to the high 200s, going into maybe approaching 300 again. And I do anticipate a nice rally going into the midterms. I really think that's what's going to happen. Now, what happens after midterms? Very, very hard to tell. And please take this with a grain of salt. This is just a hypothetical example, which I think is very likely. I don't know what's going to happen after midterms. That's my honest opinion. And I think that big institutions, big businesses, they're going to be watching what happens. They're going to be watching which politicians end up winning. And that, in turn, will most likely affect the direction of the market. It is possible for during this time frame for Tesla to actually dump with the whole market if something big happens during midterms that institutions they want to cause. And us dumping is not always going to happen because of, how should I say this, the politicians themselves and their policies. Sometimes there are some tactical tactics that are being used by big businesses for a particular agenda. All right. So I don't want to get into full details about politics. They could try to dump the market and try to blame it on a party or not. I just want to put that out there just so you guys are prepared for what's to come. So after the election, that's when I think we might see a new direction be set. Maybe downside, maybe we continue to rally and go back to all-time highs. Who knows what's going to happen? But many people believe after this election season, the market's going to dump, and the market may make new lows. I don't truly want to make that claim. I don't want to promise anything. I just want to let you guys know it's very possible, and I think you should be prepared for anything. Now, as far as this cycle goes, right here for Tesla, it's also dependent on many different factors. And right now, we are in an economy that's seeing growth that, in my opinion, is a little bit too high, which may force the Fed to be a little bit more hawkish than some people would want for the future. Now, this is going to be very important as well because what's happening right now is there are external factors affecting our economy. So we have an economy where we depend on growth. We want the US dollar. We want things to actually have inflation that's very slow at a rate of like 2%, because that's what promotes growth in our economy. That helps wages go up, helps prices kind of slowly go up. And the problem is, because of the virus, the rate at which inflation went up is too fast. So we really want to slow down demand. And one thing that will affect demand and the rate at which it's slowing down are the new lockdowns happening in China, because this will slow down demand over there and potentially bring down inflation. It's actually very possible for that to happen over there. And it could actually have an effect on the USA right over here. As many articles are saying, it could be good for the US Federal Reserve trying to tame inflation. But it isn't good to really look at it that way because it also has negative economic effects on US businesses, profitability, earnings per share, PE ratios, and things just like that. So, as of right now, I mean, the lockdown situation in China has not exploded or gone like absolutely bizarre just yet. And I really hope it doesn't happen that way. I hope it does not have a negative effect on Tesla, because the problem with it is we're so far into the year at a point where it leads to a domino effect. And that's what I'm kind of concerned about, if I'm going to be honest with everyone. So, what's the domino effect? Basically, for the short term, if China has more and more of these lockdowns, this will hurt Tesla's deliveries. If the lockdowns happen to happen in that particular area, if it happens around their factory, that could be even worse. It will affect their production too. And I'm talking about this because if it affects them for this month, overall, from a macro perspective, by the end of the year, Tesla's numbers will not be as good, because once again, the lockdowns affect them again. And that's why you have to be very prepared for this. When these things happen, a gigafactory itself is actually a liability for Tesla, because it takes a lot of money, resources to really maintain a gigafactory. But the thing is, gigafactories can act as assets because they help produce cars that bring in the money. If the gigafactories cannot be producing these cars, if they're on these shutdowns, they become liabilities for Tesla, and they could actually hurt the company to some degree. As Elon Musk himself stated, that many of their gigafactories in the past were losing them billions during these lockdowns. So that's the reason why you need to be prepared for this in case something like that does end up happening to Tesla. If we do see more lockdowns that shut down the factories, the gigafactories, and so on and so forth, and that will actually adjust the share price in a different way from here. If it does happen during this time frame, we could actually get another big drop just like this. But if we just ignore that and pretend that we don't end up seeing those big shutdowns, we pretend everything is just okay, Tesla continues to flourish, then we will most likely, in my opinion, see something similar to this. All right, so going into FOMC, I do think it's very likely we see a big dump in the markets pricing in the big changes. This will most likely bring Tesla down. After FOMC, I think we should stagnate for some time, then slowly get a nice push going into midterms. And where we go after that depends on the election itself. That's just my honest opinion. Please take this with a grain of salt. Do what you guys got to do. And this is not financial advice whatsoever. So thank you all so much for listening. Please enjoy the rest of your weekends, and I will most definitely see you guys in the next video. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.